The rent-to-own model presents a fascinating opportunity in the British property market, particularly for those struggling to secure traditional mortgages due to deposit requirements or credit history issues. This arrangement allows tenants to gradually work towards home ownership while initially renting the property. In the UK context, these agreements typically involve an option fee at the outset, usually between 1 to 5% of the property's value, followed by slightly higher than market rent payments, with a portion being set aside towards the eventual deposit. The British legal framework for these agreements follows specific contractual structures under UK property law, requiring careful documentation of the option to buy terms, the agreed future purchase price or calculation method, and the precise timeline for exercising the purchase option. This ensures both parties are protected and that there is a clear path towards home ownership. For landlords, this strategy offers steady income with potentially reduced tenant turnover and maintenance issues, as occupants tend to treat the property as their own. With a rent-to-own agreement, tenants have a vested interest in maintaining the property, which can reduce the frequency of maintenance calls and improve overall property care. This can be especially valuable in areas with high tenant turnover, where regular maintenance can be costly for landlords. Prospective investors should be aware of the specific nuances of UK rent-to-own arrangements, which differ significantly from those in other countries. Unlike in some countries, where rent-to-own agreements are more common, the terms must comply with British housing regulations, including the Consumer Credit Act when applicable. This is especially important to ensure that the tenant's option to buy is treated legally as a financial product. Local solicitors specialising in property law are essential partners when structuring these deals in cities like Manchester, Birmingham or London, as they can help ensure the agreement is compliant with all necessary legalities and protect both the landlord and tenant's interests. The rent-to-own approach has gained popularity in regions where first-time buyers face significant hurdles to home ownership, particularly in metropolitan areas where property prices continue to outpace wage growth. With house prices soaring in cities like London and Manchester, this model presents an alternative path to home ownership for individuals who may otherwise be locked out of the market. This can also provide a reliable pool of tenants who are motivated to stay in the property long-term, giving landlords a stable source of rental income. However, successful implementation requires thorough vetting of potential tenants' buyers, clear communication about responsibilities, and transparent documentation of how rental premiums contribute towards the future purchase. Potential tenants must be financially capable of completing the purchase at the end of the agreement, so landlords should conduct comprehensive background checks and assess the tenant's ability to secure financing for the final purchase. From a landlord's perspective, setting clear expectations for the tenant's responsibilities during the rental period is essential. Both parties must be aware of their roles and obligations, whether it's maintaining the property, covering utilities, or adhering to the timeline for purchasing. Transparency is key to ensuring the arrangement is mutually beneficial and legally sound. Additionally, the tenant must be fully aware of the financial obligations that come with the higher rent payments and how these contribute towards the eventual deposit. For the tenant, rent-to-own offers a stepping stone towards home ownership without the immediate financial burden of securing a large deposit. It's an ideal solution for people who have steady income but are unable to raise the upfront capital needed for a traditional mortgage. In summary, the rent-to-own model provides a flexible and innovative solution for both tenants and landlords within the UK property market. It creates a pathway to home ownership for individuals who may otherwise be excluded from traditional routes, while offering landlords a stable income and reduced tenant turnover. However, like any property arrangement, it requires careful planning, legal guidance, and clear communication to ensure that all terms are properly understood and legally binding. If implemented effectively, it can be a win-win solution for both parties, providing tenants with the opportunity to own a home while landlords enjoy long-term, reliable rental income. If you found this video helpful and insightful, don't forget to hit the like button and subscribe to the channel for more property investment strategies and tips tailored specifically for the UK market. Next week, we'll dive into the pros and cons of buy-to-let properties in the current economic climate. Stay tuned.